All right, so what's happening? So, Terry James, NMLS 1242428, your mortgage guy. So, I wanted to talk to you guys a quick minute about one of the ways that we can actually, if you don't have a home, I'm talking to all my California people because these programs are specifically from the state of California. And so one of the things we're talking about is going to be how to get your down payment, as far as you can get assistance through these state programs, where you can actually get help on your down payment assistance, and you can actually purchase, going FHA or even VA, you can actually purchase an income producing property. So that's a really unique feature. It's really interesting. And, a lot of people really don't even know about these programs. So simply by going FHA, and most, when you go FHA, you're going to basically put down, the minimum requirement is going to be 3.5% down payment. But the great thing about these programs with the state of California, CalHFA, the great thing about them is that they will actually give you a grant. So it works as a grant, or it'll be a silent second on your property, depending on which program you go with. But the idea is essentially they can actually give you this money. These funds are available for you to receive up to 3.5, anywhere from 3.5. Some of the programs are even up to 7% down payment. So what that means is, how to leverage that money is you essentially would need to use that money, help them use the funds to get you a down payment. But you can actually, if you go FHA or VA, you can actually get a multi-unit, which means that if you're living in one of the units, now these are going to be owner occupied, so you have to live in one of the units. But if you live in one of the units and you get a 4-unit, then what that means is that you have 3 other units that you can immediately start to produce income from those units. And so you move in, you get the down payment taken care of, right? You come in with very little closing costs. The down payment can actually be used for the closing costs as well. But the great thing is you get that program, it gets you down payment assistance, it gets you as far as little to, little closing taken care of. And the great thing is, so as you do that, now you have an income producing property. And now you haven't even used your own money, or hardly any of your money, to get in there. Now, for some of these programs, for the ones, with CalHFA and with the state of California, they do have some income limits. So you do want to be mindful of that. And then, of course, the credit score. Typically, the credit score on these programs that I'm speaking of is going to be 620, 640 credit scores. And so they're really good. Not every lender is going to be able to work with those programs. So you want to check with your lender. But the great thing about them is, it gives you a way that if you don't have the whole down payment, you can use these programs, use these funds to help get you something, and you can get a property that's income producing. Now, there are some other qualifications, such as you can't currently own, because these programs are specifically for owner occupied. So if you already own a property and you say, well, I'm going to come live in this one, chances are that's not going to get approved and that won't work. So these are going to be for those that, you don't own your own home right now, but you want to get something. This is a way to not only get a home, help get down payment for it, but you can actually get something that can produce income. So now if you get a 2-unit, a 3-unit, or 4-unit, you live in one of the units, and now you have 3 units, or even if you have another unit to help you pay the mortgage and get some income off of that property. And so it's a really unique feature. Like I said, a lot of people don't know about it. This is going to be for California, but going FHA, these are the programs that are available for you. And so, some people are, hey, you don't want to go FHA, you don't want to be conventional FHA. There's a lot of benefits to going FHA. And so that's one of the things. And then as you start to dive into that, the other thing you have to realize too is that you can always look to, as far as with FHA, sometimes the MIP, which is, your private mortgage insurance, is going to be a little bit high. And then, of course, it's going to come with that mortgage insurance that you can't get out of. So you're going to have that mortgage insurance until you refinance out of that FHA loan. And then it has the financing fee. So these are some other fees. We'll break down some of those maybe in another video. But I did just want to kind of briefly go over that program and let you know that there are some really great programs out there to help people get into a home when you think you can't afford it. And so this is not only to leverage, these funds that are available, because like I said, so how the program works is it comes with a grant. So you'll either get a grant for the down payment or it'll be a silent second. What that means is that it'll be a second lien on your property. You won't have any payments on it. You won't have to pay anything. You won't make no monthly notes. It'll just be sitting there, and it doesn't accrue interest. So if your down payment assistance, if that silent second is $15,000, in 30 years, it's still going to be $15,000. But the benefit is that it helps you get in. Now, how the silent second works is that if you happen to refinance later, or if you're going to purchase, if you're going to sell the property or refinance, you do have to pay that money back. So it comes out of those funds if you refinance, if you take cash out, or if you sell the home, those funds are going to come out of that money. But it helps you get in the property, and we're all talking about leveraging those funds to help you get as far as your investment future going. And so it's a really great program. And now some of the programs, as far as what I'm referring to with Calhafa, some of them is not going to be silent seconds. You'll be able to get the full down payment assistance as a grant. So there's a couple different, scenarios, credit scores, debt to income ratio, income limit. So these are going to affect some of that. But those programs are always there, even if it's a silent second. It's a really great thing to have, and that you can leverage in order to start not only your home buying process to where you purchase a piece of property, but just the fact of even thinking of getting a income producing property, because that's really when you want to start to not only start your investment, but that's how you start to generate more funds. The whole idea of home ownership is, of course, your interest you're accruing to start your wealth building process. And then if you can get an income producing property, that's going to help you out even more. Okay, so those are the things that I wanted to quickly talk about. The benefit of going FHA, the down payment assistance programs that are out there and are available for you. And we're talking 620 credit score, 640 credit score qualifies you for these programs. And besides that, there are some, you still have to qualify for the loan, of course, as far as income qualifying, but you want to check with your lender. You can always feel free to message me. I'll advise you. Like I said, these are specifically just for California. I don't know the other states. I'm sure other states probably have something like that, but I'm talking specifically to California and the programs that Calhafa has available. And so I just want to get the word out and let you know how you can leverage that. All right. Once again, Terry James, your mortgage guy. Comment. Let me know if you have any questions. Talk to you later.